Hey there and welcome back to the channel. In this video, we're going to be discussing the latest financial results for Evolution, but they announced their Q3 of 2023 results about a month ago. And we're also going to be discussing their latest announcement where they announced that they are going to be buying back shares. I made a more detailed video about Evolution a couple of weeks ago. You can check that out in the description. But in that video, I talked about me owning a personal stake in the company. So I am probably a little bit biased. Now, to be completely transparent, I have also been adding to my stake in the company for the last couple of weeks, seeing that the price went down to about $86 per share, which in my opinion is a bargain for a high quality company like Evolution. The price has since recovered and is now over $106 per share, which tells us that we have to react really quickly when high quality companies are at a bargain price. But before we get into it, I do want to ask you to smash the like button and subscribe to the channel if you haven't already. That is to say, if you get any value out of the content that I'm providing. And also, if you have any comment about the performance of Evolution, or if you are a shareholder, leave a comment below. So let's dig right into it. The operating revenues for the third quarter increased by an impressive 19%, going from 378 million euros to 452 million euros. EBITDA increased even more by 22%, going from 261 million euros to 318 million euros, with a margin of 70% compared to last year of 69%. The profit for the year amounted to 272 million euros compared to 221 million in Q3 of 2022. If we zoom a little bit out and compare the first 9 months of 2023 compared to 2022, there is an impressive increase in operating revenues as well of 26%, going from just over a billion euros up to 1.3 billion euros. The EBITDA increased even more by 27%, going from 728 million to 930 million. And the profits went from 619 million to 788 million. And management has highlighted a couple of events during the third quarter of 2023. First, being the high demand and cost efficiency generated an EBITDA margin of 70%, which they are really proud of, and rightfully so. They launched the second studio in Latin America, which is good to see. And the company is on track to exceed their plan of more than 100 games released in 2023. Here we can see the summary of the third quarter and the first 9 months of 2023. And we've already talked about a couple of these things, but I just wanted to highlight the increase in operating margin, which is very high at 63% compared to 62% for the first 9 months of 2022. As a shareholder, this is really good to see, where we get the feeling that the company is getting better on all fronts. And I highlighted a couple of things from the CEO comments, with the first one being this comment here, where he talks about during the third quarter, the company released more games than during any earlier quarter, and the live casino revenue grew to 385 million for the quarter, and the company is seeing a higher demand for their product than what they can currently deliver. And this is also something that we like to see from good CEOs that have skin in the game, that they're not just praising themselves and the company. They are talking about the company not being able to expand their studios at the right pace, where they have faced delays and in some cases not executed fully in several of their planned studio projects for this year. But even more importantly, they need to increase the pace of recruitment both in existing studios and well as to support new studios. And the studio they opened in Latin America was apparently a smaller studio in Colombia just at the end of the third quarter. And they are planning to open one new studio in Europe later this year and 3 to 4 next year in Europe, North America, and Latin America. Now, this is something that has been a worry for investors, where management has talked about growing the RNG segment by double digits year over year. But as we can see here, the RNG revenues were 66 million euros and declined by 1.9% compared to the corresponding quarter last year. And the CEO Martin Carlesund talks about despite the step back in year-on-year growth, it was a quarter where the company made progress in their RNG operations. The company is very productive at making games where they are producing more and more games and securing their moat using their size and scale. And in the third quarter, they released 28 RNG titles and 8 live games, which is pretty productive. If you watch my previous video, you can see that the objectives of management is to grow faster than the overall market. They did not achieve that in one of their more promising sectors, which is North America, but the results were only a 9% growth in North America compared to the same period last year, where on the other hand, Asia and Latin America both grew at 35 and 39% respectively for the last year, and Europe shows a steady 10% increase. Now, Martin Carlesund was asked about the slower growth in North America on the conference call, and he talked about analysts looking too much to the short term, where there was no point in looking at just one quarter. You have to look at a couple of years. And if you do that, you can see that the growth in North America has been faster than the market. This chart here shows us the quarterly result trend for Evolution and shows us what a high quality company they are and the pace that they're growing at, which is incredible. You can see a pretty steady EBITDA margin hovering just under and around 70%. Their operating revenues are the blue columns here, and that is growing as well steadily, along with their EBITDA, which is the gray column. So we can see a change here in the revenue mix with the live casino growing steadily and with management struggling to grow the RNG games. Last year, 68 million of revenue was derived from RNG games of a total revenue of 378 million. And we can see that RNG is becoming a less percentage of the total revenue with the current revenues from RNG being 66 million of a total revenue of 452 million. We can see the trend here for the last couple of quarters where the revenue from live casino has been steadily going up from 310 million up to 385. And the RNG revenue has been on a steady decline from 68 million going down to 66 million. The company has a very healthy balance sheet where they have cash and cash equivalents of 813 million compared to 319 last year. If you zoom a little bit out to look at the first 9 months of 2023, they generated about 854 million in cash from operations compared to 616 last year. And in the first 9 months of the year, the company paid a dividend to shareholders of 427 million compared to 302 last year. And when this was released, they had bought back shares for about 75 million euros. We will dive deeper into the share buybacks later in this video. But first, I want to mention a couple of highlights from the market development section, which is always interesting to read if you are interested in the company or you are already invested. Here, the management talks about the RNG being the largest vertical of the online casino market. But however, to a large extent, growth is driven by live casino having grown in importance for most gaming operators and has become an integrated and strategically important product for the gaming operators. This is something that's really positive for the company since they are the largest player in the live casino space. Also, with RNG being the largest vertical in the online casino market, there is plenty of room for Evolution to grow into that market, although they haven't been able to do that for the last couple of quarters. Now, if you look at the average number of shares after dilution for the company compared to the same period last year, they have a really similar amount of shares outstanding. But I have personally criticized, along with many other investors, the company for diluting shareholders too much in their mergers and acquisitions. Now, next up, I want to talk about the press release from the board of directors of Evolution, which came out a couple of days ago, where the company did announce a share buyback program, which in my opinion is really positive since I think these stocks are trading below the intrinsic value of the company. And here they talk about acquisitions may be made on one or more occasions before the annual general meeting of 2024. The maximum amount for which shares may be acquired may not exceed 400 million euros, and the acquired shares shall be paid in cash. If the company decides to fully execute on the share buyback program, they can buy back the maximum amount of 19 million shares out of approximately 215 million outstanding shares. That is, in my opinion, not a really significant amount of shares, but still really positive for shareholders to see. The last thing I want to do in this video, which I do for all of my portfolio companies once I've read up on their latest financials, is to zoom a little bit out and check their financial performance for the last couple of years and the key ratios that I follow. And if we take a quick look at Evolution, we can see that they've had some fantastic performance in terms of their financial ratios, with the free cash flow growth rate per share being 58% for the last year, 68% for the last 3 years, and 79% for the last 5 years. The company is still trading at a low valuation, in my opinion. The management of the company is allocating capital really efficiently, with their return on invested capital being 29% compared to the 5-year median of 25%. And their return on capital employed is also higher at 27% compared to the 5-year median of 25%. The company has an unbelievably high free cash flow margin at 59% compared to the 5-year median of 49%. And like we mentioned earlier, their balance sheet is really strong. Now, I won't be making this video any longer today. I do want to thank you for watching and hope to catch you on the next one.